Okay, today we're out in the country. We're heading out to Goulburn. For those of you who don't know where Goulburn is, it's 2 hours outside of Sydney and an hour outside of Canberra. This is also one for people who don't believe that you can make money in regional areas. So straight off the bat, houses are typically trading at around that 765,000 in Goulburn, and it's up close to 6% this year. First thing is, 13,000, close to 14,000 dwellings in a population of close to 24,000 people. You're sort of looking at an average of 1.7 people per household. The other interesting thing about this economy is it's pretty significant economic diversity for such a regional area, and it's got quite high infrastructure spend per capita. As you can see, roughly $3,000 per capita in that market. Sales trends, you can see that it's been pretty consistent in terms of the volume, consistent in terms of its price growth as well. For reference, Manly and the Northern Beaches only did 74% over the past 10 years. So you can certainly make money in regional markets, and it's very low volatility in this market as well. So, I mean, I'll show you the growth rate cycles in a minute, but you can see here, slight price acceleration during that COVID-19 period, not surprising. Slight contraction during that post-COVID-19 period, and just started to slowly pick back up again. As you can see here with the growth rate cycles, this market, the only time it's ever gone negative is during that post-COVID-19 time. Obviously, because we had that excessive growth during that COVID-19 period, but every year prior to that, it's just been consistently growing. Some years north of 10%, other years you're trading down around the 2%, but it's just consistent growth year on year on year. It's a really stable market. As you can see, there is deviation in that short-term pattern growth. I think there is going to be an uptick, and obviously that's just because of this negative growth that we had during this 23-24 period. There's not a lot of spillover potential. There's not a lot of neighbouring markets for this, being such a regional area. Renter to owner market. What's interesting here is it seems like a little bit too much at 34% renters to owners, but when you actually look at the rental market and search volume, you can see here that there's a significant amount more people looking for rental properties than looking to buy, which it doesn't matter for people who are just looking to live in Goulburn, but if you're looking to invest there, you've got a really, really strong rental market and vacancy rates of less than 1%, which is super surprising to see. There's a really good turnover of sales in that market as well. 555 sales. It's a pretty significant amount for such a small area. Demand, most of the demand is for 3-bedroom and 4-bedroom houses. Not surprising there. You can see that most of the stock is houses. Again, we just saw those growth rate cycles at 17% deviation in growth, and then it's complemented by this affordability as well. Probably trading at around 2 to 3 years below long-term affordability trends. So this market is looking really favorable from someone just looking to live there or looking to invest there. I can't see that you're going to be making excessive amounts of money with, the market doing 200% growth over the next 10 years, but I'd be really surprised if it didn't do this same again, just consistent upward trending growth. Obviously, I haven't seen what the forecast is for population growth and dwellings for this market. If I was looking to invest there, I'd be double checking those things, double checking what sort of infrastructure spend this is going towards and whether that can sustain this growth that we're having consistently year on year. But Goulburn, it was one that shocked me when I looked at it. So there's a little regional market for you that looks really positive. Anyway, if you like these videos, hit subscribe and I'll see you on the next episode.